What's up, guys? It's Brian from Hasher Hub. It's about 9:30 p.m. March 28th, 2018. We got a brand new trading video coming to you. But first, if you're new to us, hit that subscribe button, hit the notification bell. Also, head on over to DTube and Steam it, and subscribe there as well. And upvote would be greatly appreciated. So let's get into it. A little technical analysis. I don't sound it, but I am very much underneath the weather. So I'm going to try to monkey through this as quickly as possible and get you guys at least off and going as far as what our thoughts are here. So when we left you off last, I think it was last night. It was about 24-hour time period, and we were somewhere right around here. Okay, what we're looking for is a 1, 2, 3, 4, 5 coming down. In other words, which would be the fifth leg, which is drawn here. This is kept exactly from last night. Okay, now a few things could have happened. Either this 1, 2, 3, 4, 5 is it right here, or this is a large 4, and then we will eventually get another. We'll get another leg down, which would be the fifth leg, which would be some sort of construct, like this that we have here. Okay, so I'm just going to delete this for right now because things are getting a little bit messy. I also mentioned that we are also looking at some descending wedges, and this is the wedge right here that we were looking at. This one right here, okay? And you see the bottom right here. You see this right here. It's pretty straightforward. What had happened from here is we had this breakout right here, okay? And the breakout was pretty bullish, to say the least. A lot of green candles, and then all of a sudden we saw this large or larger, in comparison to the previous ones, larger green volume candle, which broke us out of it. And then we corrected very quickly right back down to the top of the wedge, okay? And then we're basically going sideways from that point. So man, I gotta sneeze. So, this wedge is pretty much over. So I'm gonna go ahead and delete that right now. And what we have left over is kind of like this sideways wedge, where it's the bottoms of everything kind of going on here. Right, I'm gonna move this forward real quick, and it's the top of this green line. Remember the green line that we've had for quite some time? Okay, it's the top of this green line right here. So, something, I have to pause this because I have to sneeze. All right, my apologies. So, so we have this small little wedge happening on right here. Let me zoom in real quick, okay? And yeah, I mean, you can kind of start counting this as like, an A, B, C, D, E, etc., etc. I'm not, just because it just seems to be too happenstance. It just seems to be too, I don't know. It just doesn't feel right to me. So what we do see is this is, if I count some of these waves in here, right? This is a 1, 2, 3, 4, 5. This could be a correction coming down, an A, B, C correction coming down. And, this would be a pretty deep correction. And so I'm looking at this as from a bullish perspective, right? Because I want to be able to basically exclude one direction versus another direction. And sometimes looking at the bullish scenario helps you learn about the bearish and vice versa. So to me, that just doesn't seem right. It doesn't seem like this would be like the fourth wave, and then this is the fifth wave down, making a smaller, just a slightly lower low. Okay, it's nearly on par with what's right here. It doesn't seem to be, that just doesn't seem to be right to me, because then we have this motive wave coming up right here, and it got absolutely stopped right by this green line. All right, and then now we're kind of going sideways, and if this is if this is wave 2 of a 1, 2, 3, 4, 5 coming up, yeah, I do know we have a lot of resistance. Don't get me wrong, but it just doesn't feel right. Especially since like we went up here and then the retracement was so deep and so hard, and then we've gone sideways from here. We had tried to have another bullish candle right here, but then was selling off, pretty much going sideways from here. The volume is next to nil. It is so low. The volume is so low, and maybe that's one of the reasons why we're not really kind of pushing up. We had this 1 hour resistance of 7,958, and that's basically spearing the market right here like a shish kebab, through the meat and vegetables. It's like right through the center, and it's telling us that the market is respecting obviously this level right here. So we're gonna have to have a break below it, obviously, or a break above it in order to go ahead, a significant break above it or below it in order to go ahead and continue on our merry way. But we also have this, now we have this bottom portion of this wedge right here, and obviously this top one, which is much stronger. What's also kind of coming into the neighborhood is a 200 moving average, and I know everybody's talking about this death cross, and we'll get to that a little later on, but believe me, it's not that bad. But the market is just sitting right on top of this 55 EMA. It just doesn't know what to do with it. It's like a gnat in the market's ear. Okay? It's just buzzing around all over the place. And, we really need to break away from this in one direction or the other, really, to kind of continue moving on. So what I do believe is that we're getting like this, this like perfect storm, like this, it's almost like the Bermuda Triangle. I call it the Bitcoin Triangle right here. Okay? Because we have this 1 hour resistance line, and we also have the top of the green, and we have this bottom line right here. So something has to happen. I don't think we're just going to meander out of this kind of sideways. I just don't think that's going to happen. I don't think we're just going to like slip out the back door. I'm pretty sure of that. So at the same time, what are we seeing? We're seeing RSI kind of fall off, right? And yes, okay, fine, RSI and the market is also falling off right here, so it's kind of 1 for 1. But let's go ahead and take a look at unbalanced volume. But let's look at this on a 1 hour basis, okay? So on a 1 hour basis, we're kind of just going like sideways, to down. There's almost like a small little triangle here, right? And yeah, that's something that could definitely, be something, right? That was pretty dumb to say. Definitely something that could be something. All right, come on. We got to do better than that, guys, right? No, this is something that could definitely be telling of, as far as direction is concerned. So if you start seeing unbalanced volume kind of going in one direction versus the market going the other, et cetera, you want to keep a lookout for those types of things in these areas, okay? Because a divergence can tell you a ton, especially with what's going on right now. So that's what's going on there. So let's get to this freaking death cross that I'm getting a bazillion questions about, and really it's really nothing, and it's basically on a daily basis. Traditionally, it's measured with a 200-day moving average and a 15-day and a 50-day moving average. Some people do a 200 EMA and a 50-day EMA. I tend to use a 200 moving average and the 55 EMA. And basically we would, maybe we'd have like another day or two, assuming kind of prices go the way they are, and we would get this, haunted death cross where the 55 would cross below the 200 moving average. Now, it's not something that you're going to be, using your doomsday rations for at all. yes, in the past it has signified where the market has turned weak for an extended period of time. But you could even see here, right? We fell below it, right? Then we went back up above it slightly, and then we fell back below it again for some time. I mean, this is, if I measure from here, let's see, this is April of 2014, okay? And let's say we got out of it like here. Yeah. So, I mean, it's like a year and 6 months. And so that's a long time. Don't get me wrong. But, we've already gone through so much of this. Remember, I think yesterday was a previous video or the one before it, where I was saying that, this is very similar to kind of what we're going through right now if people want to look at things on a fractal basis. But, I already believe that we're already kind of like here, right? Where our thing. Actually, we're probably like right about here, okay? And then to get to Death Cross after that, or right around this time period, I don't think we're going to run, kind of much further than what this chart says right here, on a relative basis, if we were to, come to the downside, because we have run so far, in other words, come down so far, so much. This one, let's just real quickly, I hadn't planned on doing this, but let's just take a look at this from a Fibonacci basis, right? And so we went past the 786 level. Okay, we went past the 786 level as far as correction is concerned. So kind of cool thing to look at. So let's go over and let's go ahead and take a look at what our resistance lines are. And the daily resistance line, we're going to keep it still at 8,907. But we are going to change this number right here to 8,520. So the candle that was today has closed out, and so based on the price movement, we're still keeping the daily resistance at 8,907 with a possible update to 8,520. The 4-hour resistance, we're going to be changing this to 8,185. Remember, we had 8,416, and we were going to probably revise it somewhere around this 8,148. And so this 8,148 is actually going to turn to 8,185. Okay, so so this 4-hour resistance line is really kind of encapsulating this sideways movement, this zigzag movement, and so I think it's going to play a role in the event that we tend to run up. If we run up and pierce right through it, I would not be surprised if we come back down again and try to test this. Okay, the 1-hour resistance level. I can look at this as a resistance level, or I can look at it as support, because remember, it's spearing right through the center of these price levels. So right now I'm just calling it a 1-hour resistance, but you could also go ahead and take a look at it as a 1-hour support. So either way, it just really is a level that basically the market's going to trade around. So again, we could still be looking for, remember we were talking about that we were having this A, this B, and this C, right? There are ways to look at this where this is, this is an A, a B, and we have a larger C coming down. Okay, there are definitely ways to go about looking at, and there are other ones as well where basically this is just a corrective wave of another wave coming down. Okay, and yeah, I know they are all pretty bearish, but I have to assume that until I see something bullish. And right now, I have to be completely straightforward. I don't really see anything bullish just yet. I really don't. In the event that this was going to be bullish, we would go ahead and we would be pricing, we would be, you know, shooting back up on higher volume. And I'm not seeing that. I'm really not seeing that at all. I know we've been speaking before in the past that on a daily basis, a long-term basis, we were starting to get a bit more bullish, and you know, that really has softened. That has softened quite a bit. And so now we're kind of like, at least in the intermediate term to short term, we are looking at things from a bearish perspective, although at time and time again, we're forcing ourselves to look at the bullish scenario. So one of the things I wanted to go ahead and take a look at as part of this bullish scenario is, okay, we've always drawn this green line, right? This green line right here, which touches the top here, touches the top here. You know, it almost touches here, it goes through here, it kind of spears through here, right? But what if that's not it? What if it's more of the red line? This red line that comes down here. It touches up here, and it touches here and down here. So what would that mean? What would that mean? So what that would mean is that maybe we have some sort of A, B, C, D, E type thing going on. So let's call this, we would call this an A, we would have a B, we possibly would have a C, right? Or maybe we don't have the C yet, right? We would have, you know, so let's hold that reservation for that. So C, and then we'd obviously we'd need a D, and then an E, and then coming up. The reason why I don't like that is because there's not much room left over. There really is not much more room left over. And so, yeah, I know, even with all these words and stuff like that and lines that I put in there, even still, regardless, draw it on your own, you'll see there's really not that much room left over. And yes, an A, B, C, D, E does not need to play out completely in order for the market to continue on its merry way. It doesn't have to, by any means. We like the ones that do the most because usually those come out with the most powerful motive waves from which to really trade pretty confidently on. So, you know, for now we're pretty much in a holding pattern until something goes on. You know, I mean, if we were trading options, I mean, I would be all over this. But we don't have that. We don't have that luxury right now. Basically, we're either buying or shorting, right? So, until there are options, this is you know, we gotta do with what they give us. So what I would say is just keep your powder dry. In other words, don't choose to jump in first, because you know, the first move this makes is probably going to be the wrong move. In other words, if it shoots up higher, it probably means it's going to actually go lower in the long run, and vice versa. You know, the markets tend to have a tendency of doing that, especially the traditional markets have a very high tendency of doing that. All coins tend to do that. Less. They're a little bit more, you know, elementary. But elementary, not, I don't mean easy, but maybe just elementary in their chart formations are concerned. So they haven't gotten mature enough in order to kind of have that added complication onto everything. So, you know, if you were to twist my arm, I probably would say we're probably gonna come down lower in the next few bars. But that's that'd be a complete bet. I would not trade off of that. But I know sometimes people just like to get like an immediate like sentiment, like litmus test. Why, I don't know. But anyway, I think it just satiates some sort of immediacy or need for immediacy. So, or immediate gratification. So anyway, we're going to leave it there for right now. I'm going to go hit the hay because I'm exhausted. Happy trading, and hopefully something will happen tonight that we can talk about tomorrow, which should be really interesting. All right, guys. Be good. Talk to you soon.